Hey everyone, welcome back to Next Gen Crypto. Today, the cryptocurrency market is experiencing one of the most intense and sudden drops we've seen this year. Bitcoin, Ethereum, and many altcoins are showing rapid declines as the world reacts to breaking news. In this video, I'll explain what exactly happened, why the markets are reacting this way, and how different crypto projects are being affected. I'll also provide real-time price updates, chart analysis, and reliable sources so you can see the full picture. Whether you're a trader or a long-term holder, this is critical information you don't want to miss. On February 28, 2026, the United States and Israel launched coordinated military strikes on Iran. This escalation in the Middle East has triggered a major global risk-off reaction, especially in volatile markets like cryptocurrency. Reports confirm that explosions were reported in Tehran and multiple Iranian cities, and Iran has responded with missile alerts. Financial markets immediately reacted, but the crypto market, which operates 24/7, was hit first and hardest. Investors rushed to sell risky assets, including Bitcoin and altcoins, to reduce exposure to uncertainty. This is a classic reaction in markets during geopolitical crises, where fear drives quick and often exaggerated sell-offs before fundamentals even matter. Immediately after the news broke, Bitcoin reacted sharply. From earlier levels around $65,500, BTC plunged below $63,000 in a matter of minutes. This represents roughly a 4 to 6% drop, wiping out billions in market value almost instantly. Ethereum and other major tokens fell as well, with ETH moving toward $1,800 to $1,850. Part of this drop was caused by forced liquidations of leveraged positions, which happen when traders using borrowed funds are automatically sold out as prices fall. This creates a domino effect, making the drop faster and more intense. Essentially, the market is not just reacting to the geopolitical news itself, but also to the chain reaction of automated selling. So why exactly did crypto drop so fast? There are several reasons. First, geopolitical risk triggers risk-off sentiment, where investors pull out of high-risk assets like crypto and move money into safer investments, such as USD, government bonds, or gold. Second, crypto markets never close, they trade 24/7, so when news breaks, the reaction is immediate, without a buffer that traditional stock markets might provide. Third, liquidations amplify the decline. Many traders use leverage to trade Bitcoin or Ethereum. When prices drop too fast, the system automatically closes their positions to prevent losses for the lenders, which forces more selling and pushes the price even lower. Finally, there's the psychological factor. Key support levels, like $63,000 for BTC, act as triggers for panic selling when broken. All these factors combined created a cascading effect that made today's sell-off so dramatic. Let's look at how this is affecting different crypto projects today. Bitcoin, being the largest and most liquid asset, dropped first but is also expected to stabilize first if market sentiment improves. Ethereum, with its massive DeFi ecosystem, saw not only price declines but also a drop in total value locked, TVL, as investors pull funds from lending and staking platforms. Altcoins like Solana, Cardano, and XRP are dropping even faster because they have lower liquidity and higher volatility, making them more sensitive to market shocks. On the other hand, stablecoins like USDT and USDC are seeing inflows, as traders move their funds into these assets to preserve capital. The market is clearly favoring stability in times of geopolitical uncertainty. Indicators show that market sentiment is in extreme fear. The Crypto Fear Greed Index has dropped sharply, reflecting high anxiety among traders. Total market capitalization fell dramatically, reflecting the combination of panic selling, liquidations, and fear. This level of extreme fear often precedes a rebound, but it's impossible to predict the exact timing. Traders should monitor support levels and news updates closely before making decisions. Short term, expect continued volatility as news develops and traders react to every headline. Bitcoin could test $60,000 support, while Ethereum might reach $1,650. In the long term, history shows that geopolitical panics often cause temporary dips but do not change the fundamentals of crypto adoption, network growth, or technology. Investors who stay calm and focus on fundamentals often benefit from dips like these, while panic selling tends to lock in losses unnecessarily. To summarize, today's market crash is a fear-driven reaction to Israel strikes on Iran. Bitcoin, Ethereum, and altcoins dropped sharply, while stablecoins benefited from the flight to safety. Traders should stay calm. Watch key support levels, and monitor headlines. Long-term holders should focus on fundamentals rather than panic. If you found this analysis helpful, make sure to like, comment, and subscribe to Next Gen Crypto. Let me know in the comments, are you buying the dip or staying out of the market? Stay tuned for updates as the situation develops.